And again, gold's back on the upswing. One of the reasons it went down right after the election was because the geopolitical fears subsided when Trump got elected, because he said he was going to be a peace candidate. And now the geopolitical risks are back. Wall Street doesn't see it. The world does. We care about money. It's America.
Silver and its never-ending demand prospects global demand to reach new heights. Industrial demand is at the center of the change in the supply and demand landscape. They believe that by the end of 2024, industrial consumption will have reached 700 million ounces this year. This would represent a 7% increase. The electrification of everything from solar panels to electric vehicles being major drivers of this demand. It is because of this that silver stands out as the metal whose uses seem to constantly grow. Silver jewelry in all markets is expected to grow, no doubt supported as well by the meteoric rise of the gold price. Golden products will still take a good share, but to fit the price targets, the public will see more silver jewelry plated with gold, providing the same luxurious look at a significant discount. Silver retail investment is not expected to grow and has had a significant drop in demand, especially in the USA, where it is believed to be about a 40% decline. The reason for investment in precious metals has not dissipated since the U.S. debt crisis remains. The election of Trump to the presidency in the USA has given some comfort to the public that the U.S. will regain control of its spending and debts. And this is why we have been seeing the recent price declines in silver and gold. On the other hand, the silver exchange traded products have had significant inflows of close to 8% year-over-year. As the market knows, these investments are typically very sticky and do not represent a threat to the market supply structure at current price levels. Mining and recycled supply of the metal is not meeting current overall demand. Metals Focus expects this deficit to remain for the next few years. Well, from my point of view, the fundamentals support healthy demand that will not be going away anytime soon. This I call the most basic market support factor. Then you must consider inflation, the global debt crisis, the currency wars, BRICS, and the unknown. Gold is the leading indicator for these factors. And though it has suffered a significant price correction since the elections from the short-term high of its prospects, this exuberance and expected relief from mismanagement of the USA's economy will be short-lived, as the problems built up over recent decades will not disappear. In my estimation, these price dips represent a real opportunity to build a safety net that will work to offset future weakness in the U.S. currency and economy. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
Read War's a Racket by Smedley Butler. He was the most decorated Marine at the time in the history of America. Back when he wrote the book, he was at the top. And it's about how the United States destroyed so much of Latin America, South America, for the crime syndicates that were doing business down there, from the banksters to the fruit companies, stealing everything they can, robbing, pillaging. China's going down there, and they're rebuilding the place. So this is very important. You know, people say, is the death of the dollar near? It's difficult to say, because the dollar's still strong because interest rates are still high. And again, we write this whole article on where interest rates are going. We don't know, but considering his past, what he's done in the past, we believe Trump is going to lower interest rates when he becomes president to jack up the economy, and particularly Wall Street, because he's a Wall Street He's one of the white shoe boys. He wants everything to go up. They're making money on this. So they're going to lower interest rates to jack up the equity markets and the economy. The lower interest rates go, the higher gold prices go. So there you got it. And what else? The Dow was down 120, S&P up 0.40, the NASDAQ go up a little over 1% because of NVIDIA. Again, is there going to be a dot-com bust? Yeah, possibly, but AI is the future. There's no question. Like it, hate it, whatever you want to do with it. It's the reality. And it's not going away, but the markets are over-speculated as we see it now. And a geopolitical crisis could crash this thing. And Bitcoin was up to almost 93 today or something, 93,000. Now, we went on the air, it's at 91,800. And again, look how it shot up with Trump being so positive on this. And again, we have a whole load of articles on this. Where's it going? What to expect and what's next?
In today's news recap, silver dips under $30, recovers quickly. JP Morgan analysts suggest sell-off is short-term and the debasement trade rumbles on. Silver prices moved under $30 an ounce in trading Thursday morning. Still, prices recovered after the United States released its producer price index data, showing a rise in prices and suggesting slightly higher inflation in October. Precious metals have been trending downward following the U.S. election of Donald Trump to return to his previous post as president. Gold traded in the $2,570 range Thursday morning. Reduction in supply. On Wednesday, the Silver Institute Industry Association said it expects the global silver deficit to fall by 4% in 2024, with a 2% supply growth offsetting a demand boost of just 1%. The Silver Institute expects a 5% increase in supply due to a spike in Western silverware scrap. Strength of the dollar. The U.S. dollar has surged in foreign exchange markets after the election of Trump, who campaigned on a nationalistic economic strategy. The move surprised JP Morgan analysts, who released a note Wednesday stating, "The swift move lower in gold post-election ran counter to our strategists' expectations. However, they think the sell-off is a stumble, not a sea change." The note continued, there isn't a break in thesis that a Republican sweep of government will likely continue to fuel further upside for gold in 2025 as the debasement trade rumbles on. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
This is from CNBC today. As the market closed. It's the front page headline. NASDAQ jumps 1% as Wall Street looks past Russian-Ukraine tensions. NVIDIA shares surge. Live updates. This is the first graph of the CNBC top story because it's about the markets. The NASDAQ composite gained Tuesday, driven by NVIDIA shares, as investors shrugged off concerns of mounting geopolitical tensions between Ukraine and Russia. Yep, shrugged them off. Who gives a fuck about that? I'm only interested in making money. I'm a billionaire. Fuck peace. All right? I'm not making this up. You could go look it up. And they could go shove it up their ass because it keeps getting worse. We write, how stupid can you be? They quote Keith Lerner, Truist's co-chief investment officer, who said, quote, the underlying trend for the markets are positive, or is positive. The geopolitical stuff, that's certainly a risk. But you're seeing some modest selling. I'm not seeing panic. It's more of a digestion of the recent gains. Yep. Quote, worthless geopolitical stuff. Yep. Yeah, stuff it up your ass. How fucking arrogant and who gives a fuck about we only care about money. It's America. Oh, what did Hilaria Harris get? What about $2.5 billion to run a stupid fucking campaign? Oh, Trump only got 2 billion. You gotta be a billionaire to get in the game. You're just the plantation workers of Slavelandia. Yep. We also note the dire escalation of the Ukraine war to emphasize what we have often noted as trend forecasters. There's no such thing as a futurist. There are too many wild cards. Nobody can predict the future. The wild cards, whether they're made by humans or inhumans in this case, or by nature.
And that's a wrap. Gerald Celente gave us an honest breakdown of his election call miss and the data behind it. What do you think of his analysis? Did his perspective resonate with you, or do you see things differently? Let us know in the comments. And if you're here for more raw insights and bold predictions, make sure to hit subscribe. Thanks for watching, and we'll see you next time.